Well, happy Monday, everyone. Welcome to our Straddles and Strangles webcast. I'm Connie Hill, and every week at this time, we go into depth on just these two strategies. Now, they are a little bit more advanced. Maybe you don't have as much exposure to them, but that's okay. Stick around. We're going to maybe stretch a little bit today. How many of you feel really good now about what kind of stocks the characteristics of the stocks that you want to look for when you're dealing with these two strategies, straddles and strangles? If you feel really good about what you are looking for, go ahead and let me know in the chat. If you're kind of maybe a little fuzzy on that, not quite sure, you can let me know that as well. And one thing we're going to do is talk about the importance of finding the right kinds of stocks for these strategies. Now, I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat with us this morning. Cameron is Cameron May CS, and we'll post educational content out on our X account, things that we notice in the market that we think you might be interested in. We'll post about it. It's also a great place for you to be able to contact us, right? We have limited ways you can do that. So one great way is through our X account. Both of us are always looking for comments that you make, and we'll respond to those as well as your questions. Now, Cameron's here to help me maybe fill some questions that I can't quite get to, although both of us are going to have our eyes watching the chat here. So let us know what those questions are as they come up. All right. If you are listening to this on the recording, I know lots of you do. When you have questions, you put yours in the comments section of YouTube, and I'll go back and review those throughout the week so you get your questions answered as well. Well, let's get through our disclosures here real quick. Appreciate your response here out in the chat that how comfortable you are with the kind of stocks you want to be looking for. And some of you are very new, and some of you are a little fuzzy. Well, that's good. We're hopefully by the end today, we're going to clear up the fuzz out of the way here. All right. Let's go through these disclosures. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes. Don't consider it a recommendation. With these strategies, with long options, you could lose 100% of the funds invested. We will be using the Paper Money software application here. It's what you download to your computer, the most robust version of Thinkorswim. And the interface is different than the web version and the mobile versions. One thing that's different in the Paper Money is that it will not assign short options early. In your live account, that can happen, but in the Paper Money, it doesn't replicate that functionality, so we like to make you aware of that. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. All right. Give you a quick announcement here. We had a fantastic Market Drive event in San Diego last Saturday. Want to let you know of some of our upcoming events. And it's kind of nice. We're on the West and then the Central and then on the East Coast there in Boston. So if you can get to any of those events, you'll be happy you did. The one in Dallas I want to make you aware of is the Advanced Options Workshop, and we don't do those a lot. Okay, we do a lot more of our technical analysis and option strategies. So this one, this is basically going to be the one for the quarter for you to be aware of. All right, that's going to be April 10th and 11th. So if you can get there, it's always a good experience for you. All right. You always take a look at what's going on in the market. Although for these two strategies, it's not as big of a factor as maybe your bread and butter strategies that you're doing every day. We're always going to talk about how you construct these trades that we're working with, the straddles and the strangles, and whether they're long and short or a combination of the two. Always going to look at some examples in the Paper Money platform. Now, let's head over here to Thinkorswim. Jump over there. Jump over to charts. And interesting, we've had kind of a big move in the market so far this morning. The market's only, what, an hour and a half old, right? Initially, the SPX was down. You can see it came clear down to here. And we've got kind of some decent support. It's kind of been ping-ponging in this area between 7,000 and say the 67, 76-ish area. yeah, it's just kind of stuck in this sideways pattern. And, it didn't come all the way down here, but it's already moving all the way back through. So it is almost positive on the day. It looks like we're down maybe 1/4%, but definitely fighting its way back. So if the SPX is looking like this, let's see what the NDX looks like. It's probably similar. It came all the way down. We should maybe show you this a little bit better. Let's go out here to a 6-month chart where you can see where this diagonal support level is, and came all the way down to it. What's it doing now? It looks like it's bouncing back up. So it's only down 0.3%. Definitely has made big improvements from the initial gap down this morning. So what do you think is happening with the VIX? With the VIX, probably just the exact opposite, right? We would expect, I'll pull it up here, we're expecting a big spike up, and then what? Then probably it dropping down, kind of corresponding with what's going on in the S&P and the NASDAQ. So yeah, indeed, it gapped clear up here on the open and has been dropping since. And it's interesting, it spiked up into this area where we're seeing quite a bit of volatility. These areas up here, when we get above, say, 20 or so, we're noticing a lot more volatility in the market. And so this being up here 22, 24, then we're seeing a lot more volatility today than what we've seen in recent times. I'd say thus far this year, kind of the highest area where the VIX has spiked to. All right. Let me look at one of your comments in here. Frank says, I'm always fuzzy about the value of options after they are purchased in order to manage the trade. Okay, we'll try to spend some time on that here today, Frank. What's the one in Boston? That one is a workshop. Should I go back there real quick? Yeah, it is a workshop that will be going on in Boston. If you want to sign up, and there might be some of you that don't know how to do this, let's just jump over here real quickly to this screen. If you come in, log into your Schwab account, come over here to learn, come over here to Schwab coaching. You see all of our mugs there. Look at this. I am almost as tall as Cameron, which really in life is not the case because he is the tallest of all of us, and I'm sure I'm the shortest of all of us. But look at it. I got to be almost as tall as Cameron. Okay, come on down here. Live webcasts, virtual workshops are here, but the in-person events over here on the right, click on the view calendar, and then you can see what's coming up here all through. I think we've got out, I don't know if this is all the way through the end of the year. I know we were out here to November. Oh, we are all out there for the full year. This one's kind of intriguing. Honolulu. You're think, hey, for Thanksgiving, maybe we just ought to check out Honolulu, come to that workshop. It'll probably be quite a popular one. We haven't been there for a while. Okay, come over here, whatever the event is you're looking for. So say you mentioned Boston, right? And so Boston looks like it's April 17th, and it says technical analysis and option strategies. So 2 days, Friday and Saturday. That's how you can't sign up for it yet. Well, I guess actually you can if you have the learn more. The ones that you can't sign up for don't have the learn more button. Okay, so out here in July, not quite ready for you to register, but you can put it on your calendar so you're aware of it. All right. Cameron says, well, it's not really that big of a difference. I'm 1.5 feet taller than Connie. Yeah, pretty much. Maybe even a little more, yeah. I don't know. Cam is 6 foot something. I think it was 6'7". I can't remember for sure, Cameron, but you could tell us for sure. All right. Let's move back to our charts here and what's going on. Today, I want to start out more with new examples, and then we'll spend time on our existing examples, okay? And we do kind of spend quite a bit of time on our existing trades because really that's where the questions come up. How do I manage this trade? How do we deal with these different legs, the long and the short, if we happen to have those? So we'll spend some time there, but I did want to spend some time on what do we look for these particular strategies, all right? So I've got here just in my scratch pad, straddle strangle criteria, okay? In my mind, the one that is the most important, well, there's two that kind of go hand in hand. One, we are looking for stocks that have made big moves. So I'm going to say big moves over, for the ones that we do mostly, it's going to be over earnings, but it could also be in relationship to big events. What are those other big events like FDA approval? Like they'll say, hey, on this day, we're going to tell you what our judgment is if you're going to go to the next phase or we don't like it or whatever, right? And so implied volatility rises, the price of options get, I'm going to say inflated. That implied volatility piece kind of swells up as that news is coming into focus. And so another event might be like, say, a lawsuit. Company has a big lawsuit that's pending, and we see out in the news, hey, on this particular date, we should find out about this lawsuit. Those can be other times when you might use a straddle and strangle. So I'm going to say big move over earnings. I'm going to say, or I'm just going to say some news, some upcoming news that we know about. And then the second thing is these things have to be liquid. All right, so liquid options, what does that mean? Means lots of open interest, right? Lots of trading activity so that the bid-ask spread hopefully is a little bit more narrow than versus wide. If it's wide and you've got 2 legs or even 4 legs in some of the trades that we do, and you have an inefficient spread there, it makes it really hard for you to become more profitable or make some money on that kind of a trade because you've got such a big spread that it's hard to make up that difference. Okay, so in my mind, those are going to be some of the 2 biggest things that we're going to look for. So obviously they have to have options. So they have to be optionable stocks. And generally, these are going to be your stocks that trade a lot, that have a lot of activity, as opposed to, say, maybe like a small cap stock that doesn't have many options exchanged on it or much volume exchanged on it. Typically, they're not going to be our candidates that we're going to be looking for. So a lot of them are really big known names. A lot of them are growth stocks that are having some headlines in the news. All right. So let's see. Make sure we're caught up to date here. No problem. All right, so I'm going to show you a couple of stocks that I chose not to use today, even though they have earnings coming up, and even though they might in the past be big movers. Okay, so first one I'm going to show you here is ANF, Abercrombie and Fitch. Just in the screen, we can see, man, this thing moves big. Whatever in the world happened here with this big drop? Okay, and we can see their last earnings on the screen here. They announced and boom, they gapped up and they ran. And they have a ton of implied volatility priced into the market maker move. And the market maker move comes from the trade page, and it comes from this area up here. This little icon is MMM, and it says the expectation of movement that's priced into the at the money options is plus or minus $12.15, which means could go up, could go down. We don't know, right? We all got to find out together which way the market reacts. But that's the expectation of movement. Well, where is this value coming from? And really, it's coming from the options that are going to expire for the news event. So in this case, March 6th. And if we were to come down here and look at the at the money, which in this case, whatever's closest to 96.78, so that's going to be 97. It's what's been priced into the at the money option here. So 740 plus 720, almost identical there, is what is priced in here for the implied volatility. And so it's somewhat close to what the total is for those premiums. Gets pretty close to that. Okay, that's our market maker move. Well, on the charts, I have a little script that's helpful, that's telling me what the market maker move is in a percent, as well as right here on the screen. Can you see over here on the right, the yellow dashes? That is a visual representation of this 12.55% move. Okay. hopefully, I share this with you every week, so hopefully a lot of you have this by now, but if you don't, I'm going to share it with you right now. If I could find it. I thought I kind of, there it is. MMM on the charts is what mine is called. Let me share this with you out in the chat. And those of you that are here live will be able to see that and use it. Those of you that are looking at this on the recording, either pause and go look right here on my screen, or in one of the next couple of charts, I'll paste it out in the body so you can see it. But we're going to get off Abercrombie here. So I went out here and I looked at basically what are the spreads here. The stock has traded not a ton compared to other stocks. Okay, 317,000. That's nice beginning for the day, right? But look at the spreads here, 710 by 940. Oh, you could let an elephant walk through there. 760 by 930. And the same thing on the call side, just these really wide spreads. There's 90 cents. There's $1.20. And so that can be a kind of a signal to you that, there's a lot of volatility priced in here. There is not as much liquidity in these options. And so just don't even worry about them. Okay, just go strike where you're not a good example for this strategy. So you don't even consider it. Okay, another one that I considered as well that has earnings coming up this week was Best Buy. On Best Buy, it's traded 1.5 million shares today, so a good start to the day. But again, if I came in and I looked at, I didn't actually, it's got a lot of implied volatility priced in here as well. Market maker move is $5.31 on a $61 stock. So that's about what? 8.5%. So a decent size move. One thing I was considering doing was coming out to the March 13s or the March 20s. But look at this. Okay, here's this 61, 330 by 425. So over $1 spread, 281 by 370. Okay. So that is the big indicator that says, okay, we're not going to use these for this strategy. Just makes it too hard when the options are priced that way, makes it too hard for the strategy to really make money. Okay. So here are the big things we're going to look for. And so I'm also going to add on here, usually, it's not exclusively, but usually it's going to be our larger cap stocks. Okay. The names that you hear that have a lot of activity and they're in the news a lot and they're moving a lot, many times are some of these larger cap stocks. I have a spelling here. I've got to fix it. Okay. Well, let's take a look at our first example. We'll see how much different this is from the ones that I said, nah, we're not going to use today. First stock we're going to take a look at here is going to be Marvell. All right, Marvell Technology. Now, this is just a 6-month chart, okay? Priced into the options here about 9% implied volatility. So that means we're expecting a big move. If it's a number down, like say 3 or 4%, then it's like, it's expecting a little move, not a really big move. But 8%, 7.5%, 12%, 11%, you're like, whoa, okay, there's a big, big move expected here. And usually you go back and you see that, well, they have been doing that previously. So for example, most recent earnings here, you can see it went from whatever this closing price was at 92.89, almost 93, gapped clear up here, right? Gapped clear up here, ran a little bit, fell down quite a bit, and eventually came back and closed pretty close to where it opened. So a lot of movement in there. And so we look for gaps and we look for big candles. Okay, so let's come out here on this one. Let's go to the full year. And we can see over here on the far left, this earnings was in March last year. So before they announced, the stock was here, they announced, and boom, big gap down, and then it continued to drop a little bit that day. Even had a couple more days of follow through after that. Okay, so yeah, it had a big move. Let's move over to the next earnings. How about this one? Closed here. Next morning, gapped up a little bit, and then kind of fell. And then they announced their earnings. I think that was at night. Let's just make sure after the market closed. Okay, so it kind of slid during the day before they announced. They announced, boom, gap down. Now, this gap was not nearly as big as this previous gap here. Okay, so it doesn't mean every single one of them is going to move big, even though it's priced in there. Here's the earnings here in August. Boom, man, that was a huge gap up, which means they're the kind of things that we're looking for these strategies. All right, so now the expectation is up here either around 88 or 73 and change is where it's expected to go right now. If it wants to know if there is a video where you explain what the market maker on the chart is, well, that's just kind of what I did here in the beginning of our session. The market maker move is how much the market makers have priced into the at-the-money options for the period of the news event. Okay, now the news event in this case is earnings, but again, the news event could be those other things I mentioned, FDA announcement, could be big lawsuit looking to get wrapped up or a decision made, okay? And so the market maker move comes from the trade page. We'll come over here. So on Marvell, an $80 stock, it's expected to go up or down $7.31. And if you go into the options for the event, okay, we can see where that's priced in at near the at-the-money options. And over here, I want you to notice this as well. Over here on this side, this first number tells us how much implied volatility is priced into these options that expire Friday compared to the options that expire the next week. So that would be out a week. And then it drops to 89%. So just a ton really priced in here. And then the next week out drops to 84. Okay, so those are some numbers we'll pay attention to as well, because sometimes we might go, let's try to sell some of that. And sometimes we might say, what we're going to do is maybe not try to sell this first month or first week in this case. Let's maybe go out a little bit further in time, which is actually something we're going to show you here today. All right, let's get rid of those lines on the chart. All right, back we go here. So basically, what is priced in to those options? Now, I'm looking at the chat here. I see that we have a survey. Man, it seems like we've had a lot of surveys lately. Those of you that are new, from time to time, we'll post surveys out in our discussion for you to respond to. And really, it's a pretty easy survey. There's 2 questions. You just fill in the radio button on a scale of 1 to 10, what your thoughts are, plop, plop, you're done. Or if you want to answer a couple of questions, you can do that. And one of those questions asks, what would you like to see? And I encourage you, if there's something you're struggling with, or you'd like me to spend some class time on, go ahead and put it in there as well, because I like to incorporate what your questions are into our sessions, typically right after we have that survey, okay? So if you want, just click on the link. It can sit in the background till you have to leave or till we wrap up our session, and then go ahead and fill it out. As instructors, we really appreciate the time that you take to do that for us. And we read every word. Our managers read every word. We read every word. It's important feedback so that we can make these sessions better for you. Now, in this particular class, it is a little bit more advanced, and some of the questions I've had have been, and comments have been, oh, it's a little bit fast sometimes. And I do expect you to stretch a little bit in an advanced class. Now, I still want to go at a pace that everybody can keep up on, whether you're that literate with options or not. Okay, want you to be able to kind of pick up on these details. All right. Let's see. Pip says what is their news? Well, their news is earnings. Okay, come out here on the chart. We see that little blue dot, little red dot here. This says, hey, they're going to announce their earnings on March 5th after the market closes, and the 5th is Thursday. Okay, so we got a little bit of time before that actually happens, but we're not going to get together before then, so we're going to do something today. All right, that is what their news is. And it's more than just daily movement, it's movement expected because of the move. Okay, movement expected because of the move. And it's not really looking for that kind of movement necessarily will happen before the announcement, but it's because of the announcement. So yeah, it could run up a little bit one way, it could drop down here a little bit before they actually announce, but the big expected move is after that earnings comes out. So Thursday night, we're going to be looking at Marvell. We're going to look at its after hours. We're going to look at the market before it opens, see if the same thing is happening, meaning the news might come out on Thursday and it goes a certain way. Let's say the market doesn't like it, okay? And in the post market, it looks like it's dropping down. Well, it's not even guaranteed to be there the next morning. Good example of this that happened last week was NVIDIA, where, and I'll just pull this up real quick here, where in the after hours with NVIDIA, they announced, and it was up in the after hours. Okay, here was the announcement, but then the next day when it came out, it dropped. It dropped down here, and then it just sold off all day. Okay, but the news at night, the night they announced, was actually a little bit positive. I'm going to say like 2 or 3% positive. And so we really want to watch these. What you'll want to do, let's come out here to Marvell, back here, is you'll come over here and you'll want to look at intraday charts. Okay, so let's say the market's closed, they announce, come out here to a 1 day, 1 minute chart. And then in your chart settings, under equities, you've got to make sure this little area is selected. So show extended hours trading session. And I have mine highlighting the trading hour session, which means the gray area. Okay, so the gray area is, in this case, pre-market, but well, actually, some of it's pre-market, some of it is what happened after the market closed on Friday. Okay, so this is where you come out to look to see what the initial reaction is. Same thing the next morning, you want to see where it's at to give yourself an idea of, okay, what way do we think the stock is going? And then that can help you plan, oh, what does that mean I need to do with my trade that I put on here? Okay, gives you that opportunity to kind of be thinking about it. Because sometimes you have to make decisions pretty quickly on these trades. All right, Marvell. So we see it has been a big mover on earnings typically. And one thing we're going to do on this one is something we really haven't done, but I think it'll be a good experiment for us. Okay, we are going to trade both the straddle and the strangle to compare which one did the better on the same kind of news. Okay, normally you're not going to trade both of them. You're not going to say, oh, I'm going to trade the straddle and the strangle. The straddle, we're going to come out here to the March 20 options. The straddle is our at the money. So $80.22, we just find the closest strike price, which in this case is very convenient. It's just $80. And so we're going to buy that straddle. We're going to buy a couple of weeks out. Why are we going a couple of weeks out? Well, number one, the options won't be quite as expensive. And number two, if we want to let one of the legs run a little bit, it gives us a little bit of time for that if we want it. Doesn't mean we have to use it, but at least it's available to us. Okay, so we're going to buy the 80 call and the 80 put here. And I clicked on something wrong here. Which one did I click on wrong? Oh, I've got to come over here. Let's change this. Let me just click on the buy price. Okay, there's our call, or our put rather. Here's our call. There we go. All right. It's going to cost us a total of $11.58. Okay. Is that the same amount as the market maker move? Well, it doesn't add up to that exactly, but we're also buying more time because we're going out 2 weeks versus what is being priced into the day or the week that the options announcement comes. Okay. I should say the stocks announcement, not the options. The stock announcement of earnings comes this week. Okay. So we're going a little bit further in time. All right. And on a straddle, it's going to typically be your most expensive between a straddle and a strangle, okay, because it's at the money. And usually our at the money options are going to be more expensive than our out of the money options, okay? So normally you're not going to do both of these. This is an experiment today so that we can just see, not that we're going to know beforehand which one's going to do better. We don't know, okay? So we're going to go ahead, we're going to put this one in. We're just going to do one contract. Fib's asking, how do I disable the shift key on this program? I'm not sure why you would want to disable the shift key. What I did to get both of these up is I held down my control key. So I hit down control, and then I clicked on the 80 call and put prices while my control key is still being held down so that it knows I want to group them. Now, that's just the way that I'm choosing to do it. You could also come in here, right mouse click, say buy, and go pick straddle off the list. You could do that as well. Okay. And make sure you would be starting at the 80 strike price here when you start doing that action. Okay. We're going to submit this. Keep in mind, we're going to spend $1,160 on this, so $1,100 essentially on this contract. I'm going to hit confirm and send. We're going to make it go to our Straddles and Strangles class. And I'll go ahead and I'll send that one in. The other trade we're going to do is the Strangle. Now, Strangle means we're going to, and both of these are long, means we're buying these options as well. But on the Strangle, we're going out of the money a little bit. Okay. And so let's see if this still makes sense for us to go out as far as what I was thinking. I was looking to do the 85 call and the 77 put. So since this is 81, 77 is about 4 away. There's no magic, go X strikes away from the at the money. It's very much dependent on just what your perception is. If you think the move's going to be really big, if you think the move might not be quite as big, but you don't want to pay as much for a straddle, you might just go out and say 2 strike prices. Okay. Now I'm going to make sure that both of the ones that we choose here are at least a 40 delta. And so we've got some choices here on the call side. I had initially been looking at 85. I liked the open interest out here. It is at least a 40 delta. So on this one, you can see it's going to cost us $390, which is significantly lower than what the 80 is running here that we already bought, that right now is saying 605. Okay, so let's come out here and let's do that 85. Again, I'm going to hold down my control key for the 85. And then over here, we were doing 81. Let's go to 78 here. And it gives us a 40 delta here. All right, I'm going to hold down the control key again. So 470. And so this option is coming in, the sum of those options a little bit less, like $3 and in the neighborhood of about $3 less. Okay, what does that implicate though? Well, the amount that we spend on these is basically we need to move at least that big to cover the premium. And the expectation is that one side's going to be a winner and one side's going to be a loser, right? If it pops up, we're looking to make money on the call. If it pops down or drops, we're looking to play the put side of things. And so we might quickly close out the other side if it looks like it's apparent what the movement is. We don't always know because it can change. We can pop up and then drop all day like we saw in NVIDIA. We don't necessarily know. But let's go ahead. We're going to put this in, and we're going to put it in our Strangles and Straddles bucket. And we're going to see which one does the best for us. We don't really know. We know our break-even points on the Strangle are out further because our strike prices are out further. Okay, so that's one thing that we want to keep in mind here. Let's see here. Just seeing if I've caught all the questions or if there's some I need to catch that Cameron is not able to help with that I just need to do it. I think we're up to date here. Mega was wanting to know my chart style. We're just candles. Mega, I said Mega, and I think it was Mega. These are just candles, all right? Just real quickly, come over here to appearance. And the way that I have them set up, and you don't have to have them set up this way, on the border, I do have it fill in the green, but not everybody does that. Some people like to keep it open, okay, as a bullish candle and keep the solid red. You could do it whatever way you want. Those of you that are colorblind, actually, the way I'm doing it might be a little bit trickier for you if you're colorblind, if you can't distinguish well between the reds and the greens. So actually, I'll just leave it like this for the rest of our time here. Okay. Our exit rule is going to be this: whatever direction it appears to be moving. For example, our Marvell, if it races to the bullish side, say it, here, we'll do some fake candles here. Say it gaps up to here. Well, initially we might think, okay, looks like the call is the one that's going to be making the money for it. And sometimes if it doesn't move a lot, like say it moves here, or maybe just a little bit here, sometimes you're like, I don't know that it's made a big enough move to let us know what the reaction is. And so sometimes we have to wait a little bit. Sometimes we have to wait that whole day. Sometimes we might even have to wait a second day before it actually decides which way it's going. Okay, because we definitely need it to move. And so sometimes we know pretty quickly, and sometimes we don't. Then typically you'll close down the losing side. So in this case, say it pops up here and you're feeling comfortable that it's kind of staying in that area and it's been bullish news and market reaction has been favorable, then you might say, well, let's just sell the put, get what we can for it. Usually it's going to be peanuts. Okay, don't plan on getting a lot out of that option, say on the put option. But you might sell it and just say, well, okay, for what it's worth, we'll get it. Some people might say, well, gee, it's only 10 cents. Let me see if I'm going to maybe hold on to that one just in case it only stays here for a minute and decides to drop. Okay, so there's no one exact way to actually trade these. Okay, so that's, I want to spend some time here on our previous trades, all right, from last week. First one I want to show you is the easiest one, okay? This one I actually did after our class closed because I just wanted some more examples out there. So I did CRM, which was going to be a big mover, all right? Supposed to be a big mover, okay? And on CRM, we just did, can't remember, I think I just did a strangle on it. And you can see they announced here the 25th after the market was open, or after the market closed. And so it gapped up here. And then it ran a little bit, even started to pull back here a little bit, but kind of stayed in this area as showing us the winner. Now, the market maker move that's being shown on here right now is not what it was, okay? That market maker move is gone, and it's just kind of graphing what's sitting out there, which is not a big move, 2.5%. On this particular one, let's go to the account statement. And basically, we just did, we did a straddle. We did the 175 column put, and it was kind of expensive, okay? Because this is an expensive stock. $23 is what we spend on that. It gapped up, and it gapped up to a point that it was like, hey, we're making some decent money on this. We waited a little bit of time, 7:32. Okay, so the market was only open for a couple of minutes, and we decided, let's just take the profit. Let's sell the put for whatever we can get out of it. And the call price had gone up nicely, right? The call price itself was more than our initial net debit. So we just went ahead and sold it, and it made us $475. Okay, so that was one that allowed us to make a quick decision because it wasn't a big enough a move for it. Okay, now let's look at, so that one's done and gone. All right, it's out of here. I want to show you here XYZ because we still have it on our activity and positions. Here's our XYZ. Let's show you what the trade was, and keep in mind here, we still have the 58 call. We did a straddle, strangle, swap, which means we sold the straddle at the price that was, or I should say in the front week of this. Let's show you here. And let's get in XYZ here, block. And so we sold a 50 call and a 50 put that brought in some premium for us. And then we bought further dated out. We bought March 13, so it still has a few days before it expires. We did an out of the money put. We bought an out of the money call. Okay. Well, what were we able to do last week? Well, last week, the 50 call was the one that was, I should say the long 50 call was the one that was in favor. Okay, so we sold this long 50 call that expired. Oh, actually, no, we bought that one back. Let me get on the right one here. Our 50 put, you're going to see it's not accounted for up here in the other transactions. Why is that? Because it moved big enough, we could just let it expire worthless. So we did. We just let it expire worthless. And we got, let's see, on our short put, it's about 218, so not a huge amount. But it expired worthless for us. That's nice. And like I said, the only one we still have going now is our March 13 call. We paid $1.70 for that. Now, the piece that it cost us money is we had to go and buy back the short call here. Okay, and the amount we bought it back for was $14.75, which in that case kind of put it at a deficit, which is why we really want this long leg to continue to move and perform. We're hoping that it helps make up the deficit for having to buy back the short call that was not profitable. Now, as we come over here to the chart, we had a huge gap up. This one really moved, and it was volatile. It ran up a little bit, it pulled back a little bit. We're still holding on to that call because it has a few more days. It gapped down here today, but it started to run up. And so we didn't panic. We said, well, let's just see what happens then. Let's see if maybe it gets back to where it was on Friday and if it continues to run. So we're looking for this call that's left to help make up the deficit for the short call that we had to buy back. That makes sense? Let me just look real quickly at your questions. Okay. Why does the one-day start chart give us different data than the 24-hour chart? Well, the one day actually, it starts today, but it also shows you what happened the previous 24 hours, so you have some context. Okay, so it is a little bit different. And you could use, and I did use the daily charts to help monitor this. Okay, came out here to 1 day, 1 minute. Okay, let's see here. Cameron, thanks for fielding so many of those questions, helping out here. It's always good to have a helper. Okay, so if you want to get better at these strategies and learn how they work, now, one, they're speculative, and I probably should put that in our list here, that you're intentionally being speculative, meaning you don't know which way it's going to go. We never do, but you know that it's based upon that event, and you're trying to play that event, and the event is uncertain. And that's why we would consider it speculative, okay, versus just putting on something because you saw an entry signal on it. Because we're not necessarily looking at entry signals here. We're looking at when we're expecting a big move, okay? All right, I would encourage you to paper trade along with me, okay? That's where we learn the most, is when we actually place the trades. We have those same questions come to our mind, you write them down, come to class, and you could say, hey, at this point, this thing threw me off, or at this point, this is what my question was. And then we can go through and unravel those questions so that you feel more comfortable with these strategies. Now, I'm going to tell you, it could be that you're like, I don't know that I want to use this strategy a lot, and you might not. But you may find times that you do want to, okay? Maybe not so much for earnings, but maybe an FDA announcement, maybe a lawsuit that's expected to wrap up. They don't always wrap up on that day, okay? So if it's not your bread and butter strategy, I'm not going to feel bad about it, okay? Because it is speculative. All right, my time is up here, but I want to encourage you to subscribe to our Trader Talks channel. Go down to that icon that looks like YouTube in blue in the bottom right-hand corner. Click on that once and you're subscribed. It allows you to find our content so much easier, okay? There's a survey out there today. Would really appreciate your feedback. I enjoy reading through your comments. And again, love to bring answers, some of the things that you have concerns about, bring those to our session and discuss them next week. So feel free to use it for that as well. And then Cameron would love if you, and I would love if you followed us on X. All right, Cameron's reposted that survey. Again, my time is up. Coming up next, Barb Armstrong at the top of the hour with trading a smaller account. We'll see you then. Bye-bye.